Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, it's another historic day. We have hit fresh all-time highs. The Nifty still holding on to some gains, but as the ticker is telling you, there have been stocks that are still trading 20% below the levels that we have seen when we last hit those all-time highs in Jan 2018. For the time being, things looking good. The Nifty is still trading with a gain of around 40 points. Sensex up 130 points. You can't complain, Mangalam.
Can't complain at all, Nigel. But the only thing is, the only chink in the armor perhaps could be the fact that it is expiry day today. So that is something we'll be watching out for. The closest option in yesterday's session was the 11,100 level. Out there, the straddle was trading at 70, and that is where we are right now, 11,170. So let's see how the day pans out going forward. But July series, as it's been over the last 4 months, has been positive, 540 plus points gains. And let's take a look at all the top stories that we're tracking this Thursday morning. Market rallies higher. Sensex and Nifty hit record highs. Sensex crosses 37,000 for the first time. Nifty scales a fresh peak, holding above that 11,000 mark.
And L&T reports a strong quarter with order inflow jumping 37% and revenue growth beating estimates. Macquarie says the core E&C operating performance is encouraging. They maintain an outperform rating on the stock.
Ambuja Cements posts strong results, higher realizations sequentially and cost control measures, as well as operational performance higher, other income, lower tax rate, all of that boost profits.
And from the broader markets, Canara Bank reports an 8-quarter high loan growth. Slippage ratio, though, remains a bit of a worry. The management tells CNBC TV18 that they don't expect slippages to be high going ahead. KPIT, on the other hand, that was trading mildly in the red. The revenue growth comes in lower than estimates. The management maintains guidance of around 8 to around 10% revenue growth in dollar terms, with margins of around 10.5 to 12.5%.
In other earnings impacts, Sanofi's operational improvement stands out with an overall good performance. Acrisil too reacts positively to a good set where revenues jumped 31%.
Okay, all right. We're holding with good gains in today's trading session. Let's see where we go from here. But what should the trade be on the Nifty then? Ashwini is with us. Ashwini, well, it's been a good start. We're flirting with the high point of the day. What would be the trade from here?
So I think that the more important trade is panning out on the bank Nifty, because PSU banks after Canara Bank, etc., are kind of assuming an inflection point. So today you could have really strong run on banking, and particularly PSU banking. A lot of these guys are already up 3.5%, 4%. My sense is they could be up 7-8% by the time the day ends.
Oh.
So definitely, banking above 27,150 bank Nifty looks extremely strong, and today will be a PSU bank day, and if the banking results help out, then expiry will help the bank Nifty at least very positively. So my sense is once that happens, Nifty should also get towards get to fresh highs. The point here is that PSU banks are under-owned, PSU financials are under-owned. So this kind of impetus can lead to a fairly significant short covering move.
All right.
So having said that, Canara Bank is a buy with a stop of 263, target of 278. Bank of Baroda is a buy with a stop of 132, target of 144. And Bank of India is a buy with a stop of 88, target of 96. A lot of these smaller PSU banks are slow starters, but my sense is as the day goes by, these are the guys where 7-8% type moves could happen.
All right, fair point there, Ashwini. Nifty Bank, remember, also has an expiry today. 27,200 is where the maximum open interest was. So if the markets are higher above that level, then perhaps some short covering, as Ashwini spoke. But individual stocks, Ashwini, a couple of them from the F&O space buzzing around. NIIT Tech has moved to the high point of the day, and along with that, we have Granules. That stock is up around 20-22% this month itself. What would you suggest the charts are saying on NIIT Tech as well as Granules? That one should come up for you, sitting with a 5% gain today as well.
See, NIIT Tech is probably differentiating itself from the other mid-cap IT stocks. So that's definitely hit a fresh high. I would think, it should be held with a stop, say around 1180 thereabouts, and I would think even 1400 is possible here. Granules is more of a short covering style move, and possibly given the way other pharma stocks are moving, not very positive. But the 200-day moving average is 110, 112. You could have a rally right up to that point because it fell from 150 down to I think $70. So oversized pullback rally is not unusual.
Okay, all right, Ashwini, thanks so much for joining in and giving us your take on the Nifty. By the way, things are looking good. We were just trading at record highs, but just in the last few minutes, suddenly we've given up close to around 10 points. L&T, that's the stock you should be looking at. Well, some part of the street was very, very impressed with their core EBITDA margins. And in fact, that's why the stock had opened up actually with a gain of more than 2%. So from the top, someone's exiting actually. Someone's, come in for some profit booking. And that explains why, in fact, the Nifty has slipped a tad bit. Remember, crude oil prices as well did move up towards that $74.50 per barrel. That's where you're seeing some selling on some of these OMCs. So you have the likes of IOC, HPCL, BPCL. All of them are moving to the low point of the day. So let's get that up for you. We could get the Brent crude price as well. That's what we have. IOC from the top, it's come off. HPCL as well has come off from the top. And even BPCL has come off the high point of the day. Well, it's a historic day, really. The Nifty as well as the Sensex, both of them have scaled new peaks at market opening itself. We spoke to a whole host of market watchers on what they're making of this historic day. Let's listen in.
So probably for the first time, you have the markets at a high and sentiment pretty much at a 52-week low. I think this consolidation patch that we've gone through since the budget, I think that has really digested the entire gain of 2017. And now probably we are ready for the next phase of the bull market. So I think this is just the beginning of a much bigger move ahead. From a near-term perspective, yes, 11,300 to 400 is what we have been working with. But 12,000 by the end of this year is very much doable. And I think you're going to see much greater upside in the broader market. So the mid-cap index could actually move to levels of 19,500 and beyond.
We are in the late stages of what's been a 5-year-long bull market. But I think what we have to concede is that this is the triumph of the Indian domestic investor. This is a rare case of the stock market hitting highs month after month and driven almost entirely by domestic money. Foreign investors really have been absent from the market for the last couple of years in terms of flows. So I think for the first time in Indian history, you have a bull market which is almost entirely driven by high domestic inflows, and we've got to celebrate that, if not anything else.
I think it's a great event to have a new high on the index, but I would think, let's be pragmatic, it's like a new high at your age. It's not such a celebratory mood for most people, but I think this is what we were anticipating for last 6 months.
All right, that was the market hitting an intraday record high, but as Nigel was saying that we have come off a bit from the high point of the day. Similar is the fate in the Asian markets as well. Barring the Kospi, all these indices are in the red now. So the Hang Seng, which opened up about 100, 120 points, has now fallen about 400 points from the high point of the day. Similar, Nikkei has given up about 150 points from the high point of the day, as well as Shanghai, which is down about. Banks, they're moving higher. Ashwini was talking about a few PSU banks, but ICICI Bank, that one should come off for you. That one has moved to the high point of the day. Most of the gains coming by in the last few minutes itself. ICICI Bank, there you see it, a sharp spike as we speak. And Eicher Motors, two-wheeler space, very interesting. There is a lot of fight at the entry level, but Eicher Motors says that nothing doing at the entry level. That stock has moved to the high point of the day. Not particularly cheap, neither the bikes nor the stock. However, there are customers for that. But talking about the consumer space, we have Borosil Glassworks reported a good set of numbers. The stock currently flattish, but remember it has had a good run, sitting at a record high, close to a record high. In the meanwhile, we have Shriram Transport numbers also. So, Mr. Kheruka, just hang in there for a bit. We'll address Shriram Transport numbers. Looks like that's a good set. The stock has moved higher by about 5%. The provisions have increased a little bit. That is something we'll have to watch out for. But incremental details...
I think the net profit number, Mangalam, if I saw that right, the net profit number was... a good beat in comparison to what we
that's on account of, and that's despite slightly higher provisions.
Exactly. When provisions are high and yet you have your net profit number looking better, we'll have to wait by for further details. But as of now, it appears a bit of a beat, and The stock as well was already holding with a gain of around 3.5–4%. So let's see whether or not it sustains. We'll have to look into the details of this. Remember, from those lows, the stock has already seen a big jump of around 15% odd.
Right, and there was a revenue growth of 20% as well. So let's see how that goes about. But let's continue our conversation, or rather, let's invite Mr. Srivar Kheruka, the MD and CEO of Borosil Glassworks, on the show. Thanks a lot, Mr. Kheruka, for joining in. Good set of numbers. They've come in on the back of a weak base. Remember, the last quarter, the comparable quarter was not too good for you given GST. So 44% revenue growth, 135% EBITDA growth, over 100% net profit growth. How do you see it normalizing? You had given us a 10–12% growth guidance for your pharmaceutical business and 15–20% for your consumer business. Does that hold, or are you likely to up that?
So thanks for having me. I think we, as you rightly mentioned, we have had, GST last year was an impact, so therefore the base is slightly lower. So these numbers I would say, tend downwards in terms of the growth over the rest of the 9 months. In general, we do see a fairly robust consumer demand, and we do expect to have good Diwali going forward. And I think as far as I don't guide for any specific year, but in general, I had been talking of a medium-term CAGR of between 15% and 20% for consumer. I think we'll be towards the higher end of that, that range in this year. And I do believe with new product launches as well, we have a long runway of growth ahead of us.
Well, Mr. Kheruka, in terms of your consumer business that you're talking about, and Lara is the brand that we are focusing on, over there you delivered a growth of 54%. Now, last year you did around 100 crores. This year, what kind of a number are we looking at? And also sticking with that brand, that's Lara, your margins, if I work it out, it comes to around 13% approximately. Can you scale that up going ahead?
Yes, Lara has done well. We invested more than 60 crores in upgrading our technology in that plant earlier this year. And we're seeing benefits of that in terms of higher capacity as well as better quality. And with that, we have been able to grow the market, or grow our market share as well. And I do believe that margins also will keep improving over there. The first quarter tends to be the lowest quarter for consumer, and going from Q2, Q3, things start looking up.
So, Mr. Kheruka, for this year, we should close at least on Lara?
Yeah, I would hope to do more than that, just a little bit more than that. Yeah.
Okay, all right. And what about margins from around 13%? You believe it can go up? Give us a couple of details about the margins. What's your advertising cost as a percentage of sales, and what was it last year?
So overall, I think if I look at advertising and sales promotion on the whole consumer business, we are looking at about 12 to 13% as advertising and sales promotion costs. And we see an opportunity in the market today to double down on that spend. And that's what last year it may have been around 8–9%, and we're increasing it because we do believe that there's an opportunity for glass to become a strong competitor to plastic. And that's why we need to educate our customers on this. So the margins will be impacted because of this increase in the ad and sales promotion expenses. But I think we would sacrifice shorter-term margins for longer-term brand salience and brand recognition.
All right, that's as far as your consumer business is concerned. If you could give us some more details about your scientific wear division. I believe packaging is where your big thrust is. Glasspack that you acquired did about 36 crores of sales last year. The market size is 500 crores. What's your target?
So, yes, we acquired this company just about a couple of years ago, little less than a couple of years ago. And it's a small player in a market which is, large and growing. So our belief is that with our technology and, our brand image, we should be able to become a strong number 2 player in that segment. In the first quarter, we grew almost 40% in Glasspack, and that's a pretty good, number. We're definitely growing faster than the market over there, so we're gaining market share. And I do believe going forward, we have a very strong base of new customers who are going to be added to our list, and we should be able to sustain pretty high growth rates in that market.
All right, Mr. Kheruka, a couple of details. How much are your online sales in your consumer business? How much do you, you target to go up out there? And the second part, in this opalware business, you have La Opala, that's the leader. Then there's a smaller player, Cello, that's been growing its market share. Do you believe that, in fact, with more competition, the margins could come under pressure? Or is the market big enough for everyone?
So to answer your question, the first question, I think the e-commerce sales are somewhere 5 to 6% of total revenues in terms of consumer revenues. But going forward, I think we should hit double digits over there. I think the e-commerce market is growing very rapidly, and even traditionally it's been more on electronics and apparel. But I see more consumers buying just for convenience, and these are all products which they're comfortable with buying online now. We've seen that breakage is hardly less than 0.5% in our e-commerce sales. So I think that will grow. Now coming to Opal segment, I think the market is growing rapidly because there's a lot of substitution happening from other products such as melamine, bone china, and I think Opal being, in my view, a much better product than the others, this will continue happening. So not only is the market of Opal growing, it's also growing because it's substituting other materials.
Mr. Pratik Jain, the CEO of the company, who joins us. Good morning, Pratik. Thanks so much for joining in. Well, your revenues grew by around 8% approximately. What aided this growth? And also, if you can tell us about your cash flows.
So we've had, we launched the InvIT about just over a year ago as India's first power sector infrastructure investment trust with a portfolio of 2 SPVs. Since then, we grew those by adding 3 more SPVs by acquiring them from the sponsor, and that has resulted in the growth in revenue. I think more importantly than revenue, I should talk about cash flows, as this is a yield instrument. We have delivered a cash flow of a net distributable cash flow of 85 crores, and the board has taken a decision to distribute the 100% of that cash flows in the form of distribution to unit holders. This translates to a per unit distribution of 3 rupees for the quarter. And on a rolling 4-quarter basis, it's 11.6 rupees, which is higher than the original IPO guidance of 11 rupees for the full year.
All right, that's great. Higher distribution guidance, higher distribution and higher distribution guidance. So what is this guidance for the next couple of years in terms of distribution?
Our distribution guidance for the full year. And we also have plans to grow our portfolio by adding 1 more third-party asset, which will close in this quarter. And we look forward to adding a few more sponsor assets towards the end of the year.
Well, is this acquisition from Techno Electric, will it get completed this quarter? And also, you said that 1 more acquisition this year. Isn't that lower than the 3 acquisitions you had mentioned earlier?
So we have the 1 asset, which is the third-party asset, which is, yes, it's an asset from which is currently owned by Techno Electric, called Patran Transmission Limited. And that is something we announced a quarter ago, and we look at completing that in this quarter. As per our original plan, we do look at making drop-downs every year from the sponsor into IndiGrid, of course, subject to unit holder approval. And we have a few assets lined up. I can't share the exact details at the moment, but we will certainly come back to the unit holders and to the board once we're ready and share the details of those assets.
Okay, so with these acquisitions, what will be the fund that you will require to fund these acquisitions, and what's the debt on your books right now?
We have a very conservative debt management and liability management policy. At this point of time, we have 100% of our debt locked in at fixed rates with an average cost of 8.3% and average maturity of 8 years. This makes us largely immune to changes in interest rates as our debt cost is locked in. And this allows even more predictability to InvIT unit holders so that they know almost precisely the kind of cash that they can expect from our current assets. As far as the return to unit holders is concerned, I'd like to point out a few more things. One is that the underlying assets continue to be AAA in nature, both at the asset level and at the entity level. These assets offer close to 34 years of residual life with known cash flows, as well as a tail period after that. And our current IRR at the issue price is just slightly shy of 10%, but we have a near-term goal to take that to 12%, which should make it more exciting for investors.
Well, the unit has not returned to listing price of around 100. Is that because of the interest rate move that we have seen? Any other concerns that have been raised by investors?
I think we must acknowledge that the InvITs are a hybrid product. They are a combination of yield and equity in nature. And any yield product in the world does move in inverse relation to the interest rates. Interest rates have moved upwards of between 100 and 150 basis points since our listing. Compared to that, our InvIT is trading perhaps only 3-4% below the issue price. So I think it's doing much better than the market. The InvIT has also outperformed almost every power sector stock over the last in the last 1 quarter. And as a product, we must also remember that this is the only first year of the product launch, and we already have 3 issuances raising cumulatively close to 10,000 crores in the first year itself. For us, this is a fantastic start to the product. We expect that over the course of this year, there will be far better investor education, a lot more institutions that will be capable and able to participate in this instrument. And with the $500 billion infrastructure expansion in the country, this is by far the best instrument for private sector players as well as public sector players to monetize assets, recycle their equity, and reinvest back in